Hello everyone. Today we are going to discuss something which is more important for a salaried person rather than a business holder. Yes, very well, this can be understood or incorporated by a business owner as well. But I would tell this video I am making, or I'll be discussing from a salary person's perspective. So the topic here is monthly income from commercial real estate investing, especially for salary class. So if you are watching this video, I'm sure that you would have watched my earlier video sessions, session 69 and 70, wherein in section 69 I am talking very well about what is commercial real estate investing, crowd-funded platforms, how to invest, what are the things you have to check or verify before investing in such things. And in session 70 I am talking about the difference between REIT, real estate investment trust, and the difference of the same with the crowd-funded commercial real estate investing. So in the earlier sessions also I have spoken about REITs. So if you are new to that REITs, then also I suggest you to go to that video and also understand about REITs as well. But today what I'm going to talk about is purely about commercial real estate investment, especially through crowd-funded platforms. So in my earlier videos I have mentioned about Strata, Property Share. There are various platforms available through which you can invest in various commercial properties, large chunk of commercial properties, say as big as 28 to 48 or 60 crore property, in which you can invest a portion of that by giving out 25 lakhs. So today we are going to discuss about that 25 lakhs, how you can fund that 25 lakhs and then generate monthly income or rental yields from that commercial property you have bought with this 25 lakhs. So now that you are clear that you have to invest 25 lakhs to get an 8% average return. So 8% is around 16,800. Let us conservatively take it as 16,000. So for a 25 lakh investment, you will get 16,000 rental yield. So in that you will have a TDS. So 10% TDS gives around 15,000 odd figure. So 15,000 you will get monthly. And if your income is less, then maybe you are investing that property in your wife's name or in your husband's name, wherein that husband or wife is having lower income slab, then you can claim back your TDS while filing the ITR returns. Now let us concentrate on that 15,000 and 25 lakhs. So how to get that 25 lakhs? So obviously the question here is that I'm just a salaried class person. I have an EMI going on for my home loan, say 40,000 monthly. I'm getting a 1 lakh salary. So how will I fund that 25 lakhs immediately? Because you all know that in the commercial real estate investing, unlike home loans, you will get the interest rates also higher from a bank, and you don't have a platform by which you can fund the commercial real estate. You will have to go for a personal loan or other loans. So don't worry about all those things. I will decode everything for you from the salary person's perspective. Now let us split the 25 lakhs into various portions. So out of the 25 lakhs, 15 lakhs you should go for a loan. I will tell you which type of loan. Now rest 10 lakhs you have to fund by yourself. Now how? Hear this very carefully. In your PF account, currently you are getting around 8 to 8.5% returns. Now break your PF. You may consider breaking the PF and say you are having some 15 lakhs in your PF. So, or say 10 lakhs in your PF. So take 5 lakhs out of it. So you are having various options of breaking the PF. So that is altogether a different topic. So you know how to apply for the PF for various, whether it is home renovation or whether it is for home loan repayment or whatever, or purchase of new home, etc. So you can get the PF and take 5 lakhs PF out of that. So you have, out of 10 lakhs, you have 5 lakhs already funded through PF. In a week, you will get or maximum in 10 days, you will get the PF liquidated, whatever amount you are applying for based on your eligibility. So 5 lakhs is a small amount, so you will definitely get that from the PF. Now, as you listen to my video, I'm sure that you have your SIPs in place, mutual fund SIPs, and maybe you are a long-term or a fresh investor. Based on that, you have to decide that. But I'm considering you as a medium-term investor, so you have some amount of mutual fund in your portfolio. So you can break some high-yield mutual funds currently at a higher level, or maybe some low-performing mutual funds which you feel that it will not perform going forward. So you can break 2 lakhs from that mutual fund. So 5 plus 2, you got 7 lakhs. Now 3 lakhs. How to fund that? I would say you are having a savings account, you are having a decent salary. So 1 lakh you have to somehow manage from your savings account. Now rest 2 lakhs. I'm assuming that again you are having mutual funds, you are having stock investments, and also you or your spouse will be having some emergency funds or some FDs in your account. So don't utilize entirely that fund, but I'm asking you for only 2 lakhs of FD to be broken, or maybe some bonds you are having. So break, or maybe even corporate FDs. So all those things. So from that you break that 2 lakh. So you have 5 from PF, 2 lakhs from your mutual fund, 1 lakh from your savings, and 2 lakhs from your FD. So total you have 10 lakhs. So you have funded that 10 lakhs. Now remaining 15 lakhs. I told that you have to go with a loan. Now obviously you don't have a home loan available in place, but if you are a salaried person, various companies, MNCs, provide you with various options of taking loans. So you have a property improvisation loan, you have in loan against home purchase or other things. So the company normally offers you at a rate less than the market figure of say 10%. So if you are having such a facility, try to opt that loan and try to fund as much as possible from that source, because it's a cheaper percentage of interest rate available from the company if you're having. If you don't have that, don't worry about that. I have other options also. If a company is offering, you may get it as low as 6.5 to 7 or 7.5%. So avail that. And I will discuss only the worst scenario here, wherein you have to go with the outside source. So outside, you can negotiate with various banks and get with lower interest rate. Otherwise, if you have some gold with you, then you can go with gold loan as well, wherein you will get average out around 8.5 to 9% interest rate. So let me consider an interest rate of 9% here for our calculation purpose. So any interest rate below that is a bonus for you. So you can calculate accordingly. But for others, as I'm considering, they are left out with no other options but to go with higher interest rate of 9%. Then that is why I will take that case, worst case of 9%. Now you are doing this for a tenor of 20 years, say. Loan tenor is for 20 years. And you are availing it at 9% interest rate. So it's like around 13,500 rupees will be your monthly EMI. So in such a case, if you are sticking for 20 years, which will not be the case, but still if you are sticking to the commercial real estate investing thing for 20 years in the particular property, then obviously you will be paying 15 lakhs for your principal and around 17.4 lakhs on your interest payment if you stick to the 20 years. Normally what happens in platforms like Strata, once you invest, you get an appreciation within a 5 years, the property is sold. So in that case, you will get your principal, you will get your compounded returns of your, obviously you will get the rental income that is withdrawn every month, and the property appreciation is another thing. So whatever appreciation you get out of the property, you may utilize that amount to repay the loan as well. But now again, I'm talking the worst case here, wherein you are not selling that. So in such a case, this is the scenario. Now again, our earlier technique to offset this interest paid. So there we are discussed about home loan interest. Now here we are talking about interest taken against a commercial real estate property. So in that case, also you can apply an SIP. Say an SIP of 1,500 rupees is sufficient enough to counter the interest rate which is paid for this loan, and you can easily nullify the effect of the interest rate as well. If you have not seen that video, I suggest you to go to video session number 80, wherein you will get how you can utilize a mutual fund SIP to offset the home loan, or in that case, a loan interest being paid in addition to the principal being given back to the bank. Now talking about commercial real estate, you are getting a average return of 8% rental yield from the property. In addition to that, so it's like 25 lakhs you are getting, then you are, after TDS, you are getting 15,000 rupees. Now, if you claim back the TDS in the ITR returns, then you will get 16,000 itself. But let's again take a conservative worst case of 15,000. So 15,000 you are getting, you are paying a 13,500 EMI. So you get a net 1.5, that is 1,500 rupees net cash flow, wherein the loan goes out as 13,500 when your rental income comes at 15,000. So 1,500 you have that. So 1,500 you will put that into the mutual fund SIP, wherein you will counter the interest rate. So you are getting a property as per me for free. So it will be very difficult for you, or very, maybe you will think this is funny or this is not practical, but you put these figures on a piece of paper or on your Excel sheet and try to calculate, so you will understand what I am trying to explain here. So in the case of the mutual fund SIP, You can even put instead of 1,500, 1,000 rupees also. And if you consider the TDS returns also, which is 1,000 rupees, then you have a net again 1,500 rupees net cash flow, which you can keep in your account, or you can utilize it for some expenses, or you can even put that again back to some of the mutual fund SIP as a step up thing year on year, so that that mutual fund also gives you greater returns and nullify all the interests which are being paid through various loans. Now, as I always say, you should always look at the cost of capital versus the return on investment. So, as I told, you are going for a loan of 9%. Now, if you don't have that 9% loan, and if you have to go with a 10.5% typical personal loan, currently the average banks are offering, so that may become a higher cost of capital and your investment is not justified. So, in that case, I will not recommend you to go with such a loan, because always you should ensure that the cost of capital is much lesser compared to the return on investment you are getting out of the particular investment. So always remember, ROI should be greater than, at least 2% greater than your cost of capital. Here, if you see the property appreciation or whatever of whatever commercial real estate you are talking about, is consider it minimum 6%. So based on the area, it can vary as high as 15 to 20% also, but I am taking a conservative 6%. So if you consider 6% yearly property appreciation in addition to 8% rental yield, then you will be left out with at least 13% XIR. So that is the overall return you are getting as far as the rental returns and the property appreciation is concerned from the particular commercial real estate you are investing. So your cost of capital even of 10.5 versus 13% is very much justified, but still I would recommend to have a greater margin. Say your loan should be at 9% and your return should be at 13%. So it's a big gap. So you will end up generating greater wealth from the thin air. So always I say loan should be taken, and it should be a good loan. It should be a good debt in the sense it will create positive cash flow for you. It should be repayable. You should find a way by doing things like this to ensure that your loan is repaid from your own cash flow generated out of the property, so that that system cancels out and you don't have a capital intensive thing wherein your salary is inadequate to pay back the loan. So this is how you should plan out for using other people's money, which is the loan, which I have explained in my earlier session also in Rich Dad Poor Dad session, which I have elaborated in my cash flow quadrant video. So if you have not seen that, I suggest you to go visit and see that video as well. So here, if you see, against a minimum 13% return, you are having a cost of capital of 9% loan. So this is very well justified. Your investment is very well justified, and you can simply sit and enjoy the profits coming out of the commercial real estate. And as I always say, you should be diversified. So that is why I'm talking about this commercial real estate. Otherwise, if you see the traditional returns from the investments in stocks, you cannot compare it with commercial real estate, because the investments, if it is correct or if it is going well in stocks, then it will beat the commercial real estate investments in a much higher way. But considering the volatility, you need to diversify your investments. That is why you need to also consider alternate investments like crowd-funded real estate investing. So hope this video was informative and you took away some points which will help you generate wealth going forward. If you have any suggestions or comments, please feel free to comment in the below comment box. If you are liking our video, please like our video, subscribe to our channel. Please share the word that we are giving out quality content in our channel, so that others can also see the video, understand the concepts, and help them generate wealth going forward. Hope this session was useful for you. See you in next video. Till then, happy investing.